Hey, everybody. Welcome to the Daily Objective and happy Friday. Today, we're going to be talking about finance. And believe me, it's not going to be too difficult because I am basically illiterate in that respect. So I am here to learn, and I'd like you to come with me. Speaking of going places, we're going to be in London March 28th. That week, the Daily Objective and other ARCUK shows are going to be live in concert, live in the flesh. You come on out to London, and we'll have a lot of fun. Then, of course, that weekend is Ayn Rand Con there in London as well. So stick around for that, and then stick around one day after the conference, April 4th, for a very special event, the details of which will be later announced. Contact the ARCUK peoples at the link below with any questions you have and all of that. All right, let's talk about finance. I am basically, it's like looking in the mirror right now, this guy. I don't know. It's like I have a long lost twin brother who spent his life indulging in finance while I indulged in, well, some other things. Let's meet him. It's Seth Levine from this very network. Of course, you know, Seth Levine. How you doing?
Hey, how's it going, man? Great to be on the show.
Did anyone ever tell you you look like me?
I mean, don't take this wrong way, man. I get people come up to me all the time saying I look like someone else. I think I just have that like generic Jewish guy from the East Coast kind of look going. So
yeah, I
better or
get
worse.
I get Pauly Shore, David Duchovny, Brad Pitt, and Joseph Gordon-Levitt.
Yeah, I get Brad Pitt a lot too. So that
Yeah.
must be it. Yeah.
All right. Well, so let me basically let's see. Let me tell you what I understand about finance. So let's say we're living in the bartering culture, so like we're trading services or actual fungible or non-fungible goods. Let's put aside the word fungible. I just learned that word from NFTs, but tangible goods. So, let's say you've got a chicken and it lays some eggs. I need some eggs, and in exchange for an egg, I fix your fence. But let's say today you need me to fix something at your house, but I don't need eggs today. If I take the egg today, it'll spoil before I get a chance to eat it. So we come up with a sort of currency, a sort of money, sort of an IOU type thing. Like you'll just give me that, and when I'm ready for some eggs or for some service from anyone else in the community for any kind of good, I'll just give them that money. And now we've created a sort of currency backed up by something real. So backed up by gold. So there's a finite amount of it. And that's what finance ought to be. Do I understand everything correctly so far?
Yeah, you actually it's pretty interesting. So finance to begin with is a pretty big tent. It encompasses a whole lot of things. It's a subset of economics. People tend to conflate finance and investing as one thing, probably because part of investing, we use the word financing, right, or financing. If you're a white shoed finance guy like me, you always make the soft eye, so it's financing, right? I mean, I work in finance uh for whatever it is. So there you go. There's your first tip to sound like a real expert in finance, just to use the soft eye. But yeah, the other thing, so let's just kind of, I'll just kind of talk in generalities, but that whole origin of money barter system that you just described is actually it's something I've been researching pretty recently, and it actually is it's a myth. In fact, if you look at how money seems to have developed, what money is, and sort of how it came into existence, it really has less to do about that barter economy and more about what people call the credit, kind of credit system, which I think is a bad word for it unless it's properly understood. So it really seems like, hey, like it used to just be like, if we think about credit as in think of like the credits of a movie, right? As opposed to debt per se or borrowing per se. It's like, hey, like, let's say we live in some like, primitive society. It's like, I'll help you out with some stuff, you help me out with some stuff, and we kind of we're keeping track of it kind of in like almost like a database, if you will. And sort of currency came into existence to intermediate kind of that kind of credit system, for lack of a better word.
So it didn't necessarily emerge in the midst of a barter culture, but other than that, it is sort of the idea of we'll keep track of who owes what or who did what work or what belongs to whom, kind of like a blockchain, to use language that the kids can understand.
Yeah, there you go. Precisely.
All right. So yeah, I like that. So like a movie credit shows you who did what, or credit at school, like extra credit or just regular credit. Right. And here we go. Okay, so this is starting. I'm starting to see a vivid picture. All right.
And and actually a great quote about credit, right? And kind of like really clarifies it. Comes from Henry Hazlitt, who people on this network, I'm sure, or some people are familiar with. If you haven't read his book, Economics in One Lesson, it's by far the best thing out there, and very graspable. But he has this line, and I'm going to totally butcher it, but to quote, kind of try and quote from the book, he talks about, when a person walks into a bank and a banker lends him, gives him credit, he's giving him sort of credit based upon his, credit in a sense, right? In terms of what that person, the character of that person, what that person is capable of, and the totality of that person, as opposed to like, what are your financial assets or something like that, right? It's all kind of wrapped in, the assets are sort of one way of abstracting away kind of this broader concept of, or concretizing this broader concept of credit, but it really is sort of like, what is the person's metal, if you will?
So how important is it? Because I know a lot of free market people think it is very important that money be backed up, be like kind of like a reference, be referring to some amount of gold or some substance, something in reality. Like, why is that important? Like, if we're just keeping track of who did what work and what belongs to whom, like, why can't we just have a list of just keeping track of all that without having a pile of gold somewhere?
Yeah. So this is a really big question. So I'll try and keep it light. And this isn't something that I've been researching. I did like for those who don't know my show, it is The Integrating Investor. It is on ARC's YouTube channel. I did one full season of it. I wrapped up the season in December, but in that first season, I did a 7-part series on money. Now, why did I do a 7-part series on money? Like, everyone should know what money is, right? It's so obvious. Like, we all use money every day, but I think it's one of these sort of misformed concepts. I'm not the first person to kind of put it in those terms, I guess. Well, I may be one of the first person to put it in those terms, the epistemological terms of like the objectivist epistemology. But I think of money as really just a measurement concept. And I use it in a analogy, right? Money is to length as dollar is to inch, right? So basically, money really constitutes this concept of measuring economic value. Because if we are in a society, right, there's more than one of us. Human trade is a huge benefit to individuals. If we're going to trade, we need some kind of way to basically account for what we're trading. And that whole broad concept is money. And now I think that is distinct from the medium of exchange, which is currency. I call it currency. So what a lot of people, free marketers say, and I don't disagree necessarily, is that currency should be backed by something real. And that, I think, makes a lot of sense, because and it's important to see it in these terms as distinct, because when currency is not backed by something real, then this is where we get fiat currency and the age that we're in now, right? When currency needs to be grounded to reality, right? And gold production was one way of grounding currency to reality. Now, if you look through history, there's all sorts of other stuff that was used as money throughout times, like textiles and clamshells and whatever. But basically, when you have nothing, when you have this fiat system, I mean, history is pretty clear. I think it's like 0 for 150, something like that. It usually ends pretty poorly, because if what we're kind of trading with, this medium of exchange, is not backed in real production, then it's like, it's essentially a whole subjective kind of world that we live in. And that is way abstract. I don't know if that made sense.
I understand that just printing money and just saying like, here's money, want $1 million, here's $1 million. I understand that takes the value out of it. So
sure. Right.
I understand that. I understand why we don't want to just print money and treat it like it's real, like it refers to any value. But I don't understand why we need why gold or something needs to be involved. Like I said, like how about just we keep track of what work you did, what you own, what you've purchased or produced, and same with everyone else. That to me. Like I understand why real estate has value. Like I don't really understand why gold is valuable just because it looks nice and girls like to wear it. Well, guys too, but like why should all money in some way relate to that gold? That's what I'm struggling with.
Yeah, I mean, we tried to make this simple. Like this is pretty complicated stuff. So bear with me here. So when we separate the whole concepts of currency, right, that needs to be backed by something, let's say, and money as just this measurement concept, I think it becomes a little bit more clear. If money is basically a measurement concept for value, then basically all production in a society is money, right? So like if I go out, let's go back to, some kind of agrarian society, and I grow some corn, right? But I don't have any dollar bills in my wallet. I still have money because I can use the crops that the crops that I grew have value, right? It has production value. I produce something. I now have value. Now we just kind of account for that value in money terms, right? If I was a farmer, if I was a commercial farmer, I'd be like, okay, I just grew 12 bales of hay. Hay is worth, X amount of dollars per se. So now I don't have 12 bales of hay. I have $1 million, in my, I have $1 million, right? So when you think of it, but really, like, I don't have $1 million bills. Really, I have whatever I said, 12 bales of hay or something, right? But I'm accounting for the value that will garner in money terms, right? So money is distinct from like dollar bills, right? Dollar bills would be a medium of exchange, right? In whatever denomination. So when people say we can't just print money, well, really what they mean is you can't just print currency, right? If you go back to, the classic, not classic, but like the humorous sort of pictures of like the Zimbabwean hyperinflation, you could just, Google this. You see people with wheelbarrows of Zimbabwean currency, right? The currency has become worthless because the currency has no bearing in reality anymore. So it's important to have your currency that has some sort of bearing in reality because you are using currency, right? Those bills to actually mediate trade in the future. So now I have these 12 bales of hay. I want to sell them to you, Rucka. Like you give me like physical dollar bills or some other kind of medium of exchange. And that's how trade takes place, right? We're not bartering. I'm not just giving it to you. If we had a ledger system, like if you're my neighbor, I say, what, I know Rucka's good for it. I'll just give him hay and like, you'll hit me back up like whenever, right? That works. But if I don't know you, if you're just some stranger, I'm like, oh, you can't just, what are you going to give me, right? And that's where money comes into play. And backing money with some sort of basis in reality alleviates my concern about your credit worth in a sense. Like, I don't have to worry about your credit because now I have a currency that I know is worth something. Now, what is that something worth? Let's go back to gold, right? Let's say you give me, let's say it's 19, just because I know the numbers. Let's say it's 19, 30, let's say it's 1920 and $1, 21.6 cents equals an ounce of gold. Now, there's nothing magical about gold per se. There's nothing magical about anything else. But look, I'm not a gold miner, but I know that mining gold takes an operation, right? I can't, I just can't go out and mine gold, right? I need a mine first and foremost. I need trucks. I need miners. I need like knowledge about how to find gold, where to find gold, how to process gold. Then I need a whole supply network of like people moving gold around and then melting it and then giving me gold bars. Like there's a whole real process there that I know my dollar bill is worth, right? Like, if I had 21 bucks, I'd be like, I know that like I can exchange this for at least an ounce of gold. And that ounce of gold has bearing in reality, right? So I don't have to worry about what the heck is this ounce of what is this $21 worth? Like, it's worth an ounce of gold. And that ounce of gold I can see, like there is a concretization of the effort that went in that can match my effort that I'm giving someone else. Does that make any sense?
Yeah, no, I think that's it. It's starting to make more sense. We can't, so it does, so like, because without having anything tangible in reality, then it's like, okay, I'll give you 20 currencies, $20. Right. But we don't really all know what that even is worth. And tomorrow people can start saying, well, actually what was worth 20 yesterday is worth 15 today. And like, it's just, you need to have, so now gold does not completely stop the changing of the value of money, but maybe it makes it much more of a slow change for like inflation or deflation. Is that correct?
So I think like just the way, like let's not even put like the inflation deflation to it, but when you have like, let's think of the words like objective and subjective, and I'm going to use it kind of with this audience in the objectivist context where I can see when you give me a dollar bill, I can see what it's worth, right? Like I could see it has value. I'm not going to say what it's worth because that's pretty interesting. I could see it has value. When we're in this fiat currency world, and even to mine gold, like the costs are gonna fluctuate, the input cost, it's gonna fluctuate, right? But whatever, like it is what it is. When we have fiat currency, which is just basically, let's just say it's run off by the printing press. How do I know what my dollar is worth? Well, it's subjective. I have to go and trade it with someone else. Someone else needs to accept it, right? In trade. Now that's true with the dollar bill gold backed by gold too, but at least with the dollar bill backed by gold, it's like, okay, worst case scenario, I know I have gold and I know that creating gold takes something. It takes effort, right? I may not want gold per se, but no one else can it's something tangible in the real world. Now, when I have a $21 and I go out in a fiat currency world, well, true, I can go out and trade it for goods and services. That is 100% true. I know what $21 gets me in today's society, right? We all do, right? But the problem is that can change significantly more easier when you have a printing press and it's run off, right? There's no basis in reality for it. There's no tether to reality. It's a better word. No tether to reality that can prevent it from the amount of currency sort of in circulation becoming unhinged from the actual real world production.
Okay. So we've talked a bit about how money, what finance has to do with like keeping track of who owns what and who owes whom what. And now let's talk about like the loans, capital, really capitalism. Let's say you've got a lot of gold or a lot of wealth that you've accumulated. I'm trying to get a business off the ground. That's going to take some investment. So I will ask you, okay, can you loan me $1 million? And in 5 years, I expect I'll be able to pay you back with interest. And we agree on what the interest will be. And I borrow that money. So I'm able to launch my business and then later. So that's the idea, right? So that's what people have basically done through history in order to bring about big projects that take more than an immediate moment to bring into action, right?
Yeah, I mean, this is again another. I'm going to try and keep it simple, but first of all, that money view, what I said, is not a popular view. That is my view that I've I've been developing this view over many years. I'm not saying I'm unique, because there were some people throughout history, but like that is not a popular view of money.
Specifically, what about your view is unique?
Separating kind of money from, from say a medium of exchange. Like most people lump it all together. So if you go back into money, there's a famous like 3 or 4 kind of what I would call package deal is kind of the wrong word, but I would say just a poorly formed concept of money where, we hear that money is, a unit of account, which is kind of how I think of it, a store value, and also a medium of exchange. Most people are like, all right, well, sure. Yeah, like obviously. But then when you start to try and use these concepts, things get really confusing. So like, what is gold? Like people are like, gold is money. Well, I would say no, like, okay, like gold is money. Like, all right, here's a gold bar, go try and transact, right? You can't transact. Well, gold. So, so maybe it's a store value. Like maybe it's store value, right? You have a gold bar, you're just going to hold value in there to varying degree. It's not a unit of account. I don't say, hey, Rucka, let's go. Listen, I love to, let me think. I'm gonna go buy salmon. I walk into a store, want to get a beer, and guys like, oh, that's 3 ounces of gold. Like, no, he's gonna say it's right. We don't use it as a unit of account. So gold can be a store of value, but yet we call it gold money. Like that's weird. What about credit cards? Credit cards money? Like I buy something, like I swipe my credit card. There's no money being exchanged. I'm swiping my credit card, right? Like doesn't store value in my credit card. Like I use it for transactions. I don't say, hey, I want, again, same beer in units of Visa. No, like we're talking about dollar bills, right? But yet I can use it as a medium of exchange. But there are people who are like, no, credit cards are money. Like, okay, well, what is money? And they're like, well, what's your credit limit? Or like, how much are you transacting? So things get really weird with these sloppy concepts, and they, there's things like bonds, right? Like bonds, like people are like, oh, I store my money in bonds. Well, you know what? Like institutions, big money centers, they actually use bonds as medium, as current, as a medium of exchange. Like we do financial transactions using bonds, not like dollar bills. So are bonds money? Like people are like, no, bonds are bonds, right? So you get all these mixture of concepts if you don't separate them. And then, in my view, they lead you to really weird ideas like modern monetary theory, or, like even concepts like inflation. So that's a lot there too. Again, those are kind of unique views that I've had to really develop, because I see these contradictions, and like, it doesn't make sense from a definition epistemological perspective.
Mm-hmm. Well, there's quite a bit I don't understand about kind of the difference between what you're saying versus, let's say, I don't know, the other finance savvy objectivists or whatever. Yeah. But I mean, can you speak to my understanding of like basically how financing a venture works, yes. and that's kind of what brings us from living as bartering cavemen to basically having an industrial, highly technological society. Am I correct?
Yeah. So even that whole financing, investing concept, like there's sub kind of sections of investing, right? So if you had this venture, now undoubtedly the creation of capital, the use of capital has created an abundance of more capital, right? That's the whole process of investing, is taking money, investing it, doing whatever. It could be either buying stocks or bonds or whatever. It could be starting a venture, whatever it is. At the end, you get more money at the end, or as I like to think of it, there's more production in the world in the end if you have done a successful investment, right? I mean, it could be unsuccessful, of course. So if you want to have, in your example, you want to have this, this venture and you need money, you can get it from me for 2 ways. Classically speaking, you could borrow the money, or you can make me a partner. You could sell me a stake in your company. Both are very different, and they work in different ways, right? If you borrow money from me, you still are the whole sole proprietor. You own the whole thing, but you have to pay me back. And if you don't, given, given the lending laws, for lack of a better word, I get to take everything over from you. I mean, I don't want to, but like, that's how it would happen. Like I now get control of the assets if you cannot pay back. What that process is a leveraged transaction. So basically, you are trying to spend money that you don't have in the hopes of creating even more money in the future, right? So it is actually a money-making process, right? It is a production-enhancing process. You are starting with X amount of value in the world, and then you're going to end up, through your work and what you're doing, you end up with more money in the end, and even more money than what you even borrowed from me and what you started from, right? So when you see money as this concept of money is production, you have created money, right? You have created valuable, goods and services in the world. The value that I created for you is I get paid on it, so I earn a return stream. But the value, so my value is I get a return stream from you, right? I get more money, right? You get more money, right? Because you have this bigger production capability now. I get more money because I literally can count up more money that I have, in the end. But it's a massive benefit to society, because now, if you look at the aggregate, there's more money in the system. Where did that money come from? Thin air? No, you, Rucka, made it. You made it with the leverage that I provided you, right? So you made it with your kind of production. I made it via the risk-taking capabilities of the risk-taking process of providing leverage. That's kind of something that people don't talk about. I'm sure it's well understood, but it's not really, again, it's a pretty radical concept, what I just said. Now, if you just sell me a stake in your company, I'm still providing you with money. I'm making an equity investment, but now you've diluted your stake by a little bit. We're still making more money, but we're making it in different ways, because now I participate on the upside, I participate in the downside. You have less risk of losing everything, so it's a different type of financial arrangement.
Mm-hmm. Yeah, there's different levels of risk and reward from everyone's perspective on how the agreement is agreed upon. And then it's time to pay back the financier, and a lot of people groan and get angry. And do you share the view that I've heard Yaron Brook express, that like a lot of the cause for anti-Semitism from Europe is the fact that the Jews were the ones that the Christians were forbidden by their religion to give loans with interest, I guess, which is called usury. Is that what that usury? Yeah. And then the Jews, of course, were allowed to. And then when it was time to pay the Jews back, well, okay, we can kill them or we can pay them back.
Yeah.
Let me think. But just generally, I mean, putting aside, the incentive by some to kill, there's just general resentment people have towards the financiers, which we see, and which maybe has to do with people kind of evading kind of what it takes to bring about production and value in the world.
Yeah, and I think I do agree with Yaron's view. That essay he wrote, I think it's in the Objective Standard. That's free. I forget what it's called. If you haven't read it, it is fantastic. Kind of going through the history of money, the history of the culture of money, if you will, because it's pretty fascinating. From Jesus kind of throwing the money lenders who were Jews out of the temple, the Holy Temple. They were Jews because Christians were literally forbid to do so. But I think this, like money is vilified, and the whole making money is vilified throughout history. I mean, it goes back to biblical times and before. It persists today. I mean, look at the Wall Street hatred. And now some of that's a package deal, because some of that is, I think some of that is justified based on the part that rests upon the cronyism that is there. And that, of course, shouldn't say of course, but probably intuitively a lot of people understand relates to the mixture of state involvement in the investment industry, right? That the mixture of state and state and commercial ventures creates cronyism. That is literally the vehicle for doing it. But people don't understand money. I think it was like, if you go back to the Greeks, like people thought like money came out of thin air. This whole concept that money can just come out of thin air makes it seem like people who make money via risking money are literally doing nothing. We're paper pushers. And like, I deal with a lot of like really smart professionals today who I really respect, who kind of have that view of their job. Like really, like, I get paid to do, like, what value am I adding to the world? That's very common. You hear people, what value am I adding to the world? Well, if you share this view of money that I have, it becomes very obvious what value we're adding to the world. Our risking of capital in whatever form it may take, via leverage or via, an equity investment or whatever else, is helping to produce more money in the world. You can't, it supercharges that process.
Mm-hmm. Generally, I see a strong link between finance and thinking abstractly, thinking long term. Basically, what separates human beings from the other animals is that we form concepts, and then we need to do that. We need to plan and generalize. I mean, just use these concepts and abstractions to live beyond the range of the moment. And generally, I think the more we see cultures warming up to reason, warming up to finance, kind of the more benevolent and generally positive things seem to get. And the opposite is true. Like, the more mystical and kind of anti-trade the philosophy of a culture is, the more we see violence and otherism, scapegoating of peoples and stuff like that. Okay, you mentioned bonds. Can you just explain to me, because I've always wondered what exactly is a bond?
Yeah. So a bond is really just a financial contract. Like, there's no bond in the world, right? You're not going to like walk down the street and trip over a bond. But it is a financial contract. Like, you will trip over a bond prospectus, which is a legal contract. Now, a bond has a legal word associated with it based upon a tradition of, I don't know if tradition's the right word, but there is a whole sort of body of sort of legalese there that defines what a bond is and what a bond isn't. But basically, a bond is leverage. A bond is you borrowing money from me and what's the right word? Promising to pay it back at a specified date and a specified time, with maybe or maybe not specified payments in between. It's most common that commonly most bonds pay interest, not all do, but doesn't matter. It's basically a legal document. This is, I give you money and you will pay me this stuff, this amount, this on this schedule until you pay it all back on this date. And if you don't, this legal document tells me all the things that I am entitled to, right? And basically, for the most part, depending on what type of bond you have, it's basically I get to come in and take your stuff, because not that I get to take your stuff, but I assume control of whatever it is you use my money, right? I'm using that as that is my collateral, if you will, as opposed to equity, right? As opposed to stocks and equity, right? Basically, it's legal contract, right? Again, you're not going to trip over a stock in the street. You may get a stock certificate, but that's just basically, again, it's saying that you are, part of this legal document, where it's basically saying, hey, I'm going to give you X amount of money and you're going to give me X amount of shares or percent interest in your in what's going on. We're going to, and like, we are going to, profit in we're in it together in a sense, right? We're equals. There's no hierarchy of claims, if you will, or hierarchy of legal status. We are now participating on the same level. Whereas in a bond, right? In a bond, we are not participating on the same level. I'm saying, I will lend you this money. You will pay me back this according to this schedule. But I'm not going to participate in your upside. You don't have to pay me any more than what I'm asking from you. Like, you could make $1 bazillion and owe me $1. Like, I don't get it to participate in any of that. Our agreement is only what's stipulated in the bond document. As in return for that, I'm going to be a senior claim holder than you are. So if you can't pay me back, I'm gonna assume everything. And you as a borrower say, you know what, like I will gladly do that, because if I can't pay you back, it's worth nothing anyway. And like, quite honestly, like I don't want you to I want to keep all the upside for me.
Now, countries use bonds with one another, right? We see that through historically and to this day. So why is it that bonds are a convenient way for countries to deal with one another? What happens if a country can't pay the other country back? Do they swallow the country and exit?
Well, sovereign debt is a whole sort of, that's called sovereign debt. Sovereign nations issuing debt, as opposed to, say, corporate debt, where you have corporate entities. Things are pretty messy in sovereign land. Now we have seen sovereigns default, like Argentina defaults every couple of decades or something like that. You don't see that same kind of restructuring mechanism. You basically see a restructuring mechanism, whereas restructuring the contract, that's really what's happening. We're not going in and like building different roads or changing roads in these countries. We're restructuring literally the bond agreement that we've all agreed to. And the reason why we all do this is, like, as a bondholder, like, let's say I'm a bondholder of a defaulted country XYZ, like I can't take over XYZ, right? Like ultimately I would have to go in there with like a military, right, to do that, because they'd be like, yeah, whatever.
Yeah.
Screw you, Seth. Right. And I'd be like, yeah, I guess. I mean, I'm a blue belt of jujitsu, but you got an army, right? Oh. So what happens, but really it's like, as a bondholder, like I don't want to do that. Like I just want my money back. Right. And as a borrowing country, like you're borrowing, these nations are borrowing for a reason. Like they're running, they need the money, right? Like they need it. So if a country's just like, screw you, Seth, like, and investors, like, you're come and get it, right? Well, that country's going to be like, you know what? I still need to borrow money. And everyone else is going to be like, why would I give money to that country? They just screwed everyone. They just basically stole it from everyone, right? So there's a reputation that countries need to maintain, because they still need capital, right? To run their companies, which flies in the face of modern monetary theory, but that's a separate issue. So the bondholders don't want like a hostile arrangement. They just want more money. The governments don't really, they're not giving up the government, but they still need money. So they come to some kind of agreement, some kind of financial agreement that makes everyone happy. And then, we go on kind of status quo. Argentina comes back to the bond market, issues bonds, and then, buyer beware. There's a interest rate associated with that. And then, we'll see what happens from there.
All right. So let's get it another time. Let's get into modern monetary theory, which I've heard of, which sounds like someone trying to reinvent the wheel or something, but it's
neither modern nor monetary.
That makes sense. Let's get more into that another time. Let's get learn more about you next time. I understand you got a story to tell, but let's read some super chats. Yes. And please follow Seth on the socials as listed on his green screen background. But super chat time. Now this is the type of finance I am familiar with. Roland with 499 euros says, if there's one thing I know about finance, it's that this show is worth financing. Now that even I could have told you. And one thing I know about finance is that the euro is my favorite right now. It's always worth more than the others. Marilyn with $2 American. Thank you. Rat Lover with 10 pounds says, I look more like Nathan from The Wanted and Spud from Train Spotting than any of those other actors. I don't know who any of those people are, but thank you.
I guess I do too then.
Yes, absolutely.
Yeah.
Marilyn with $2 says, how many chickens will you give me for this cow?
Yeah, that's yeah.
Right. Roland with 20 euros says, quote, this is by Hazlitt. There is a strange idea abroad, held by all monetary cranks, that credit is something a banker gives to a man. Credit, on the contrary, is something a man already has. Is this the quote you had in mind?
That is the quote I had in mind. Thank you so much, Roland, for the super chat as well as for the quote. It's just beautiful.
Yeah. Jonathan sends over $9.99. Thank you, Jonathan Honig. He's a finance guy. It must be quite a thrill for him to watch this conversation. Rat Lover with 10 pounds says, I am planning to buy a Rucka NFT, but I forgot the password to my Phantom wallet. What should I do? Yeah, I love that. Everybody, please send us your tech support questions, just general, whatever you're currently dealing with. You forgot your password, super chat that. So I guess you're supposed to write down the list of words when you created your Phantom wallet. So it would always be retrievable. If you did not write that down, good question. Maybe create a new Phantom wallet. I really don't know. But thank you for the question. Enric with $4.99 says, thanks. All right. All right. Well, I guess that's all the time we have today. Do you want to jump over to Clubhouse? Do you have a few minutes to do that?
Yeah, sure. That'd be great.
All right. Well, let's do that. Thank you, everybody. Let me tell you what else is coming up today at 8 p.m. UK time. James Valiant is discussing philosophy and the real world out there, a lecture by Leonard Peikoff. All right. And that's our show. See you all back here on Monday, same time for the Daily Objective. Thank you, Seth.
My pleasure.
And goodbye.